Hi all, this is Sachin. It's the day 3 of technical analysis. I will explain the trend line once again today. See, market has lots of techniques and methods to trade, but understanding the single method or technique is rather better rather than understanding the multiple techniques at the same time. So we'll master the trend line first, later we'll move on to other concepts also. I will explain you some advanced concept of the trend line today, how to trade it also, how to trade and how not to trade it also. I will explain the both concepts today. Say I'm in a Nifty Bank chart. If you don't know what is Nifty Bank and Nifty 50, please comment me. I will explain. Dedicated video to explain Nifty Bank and Nifty 50 also. I'm in a 5 minutes chart of Nifty Bank. Why I'm in a 5 minutes? Because I'm looking at market live. So whenever you are looking at market live, being at lower time frame is better to understand what market is doing at lower time frame. Okay. See, first we'll draw the trend line. I've explained you how to draw the trend line. For that we have to mark our lows. This first low, this second low, this third low, and this is fourth low. If I draw the trend line based on these lows, it will look, it looks like this. See, it looks like this. Zoom in, see, it looks like this only. See, when price came to this area, we got this two swings, this one and this one. Based on these two swings, I drawn a trend line. Okay, when price again coming to this area, it got a support this area. Again it came to this area and it got support. Again this came to this area and it got support because it didn't get any follow from the seller. It went back again. It was going upside again. So the lots of people, what they do, when price come and break the trend line, like here it break the trend line here around this area, they directly take the trade. They don't look what will be the risk and what will be the reward. Then they will fail at that moment. So taking the trade is not only a thing, we have to analyze other things also. The one important thing is risk to reward. What is the risk to reward here? Risk to reward means if you are doing any business, if you are if you are doing expenditure of 1 rupees on that business, how much profit you may get from that business. If you are getting 2 rupees profit when your expenditure is around 1 rupees, that is risk to reward is 1 rupees risk and 2 rupees is reward. That is the better business. You are getting double of your expenditure. If you think same here, if you entering the trade here, as per the technical analysis, you have to place your stop loss above this trade, above the swing, which is the swing above this trade. You have to place your stop loss around there. What is the swing above this trade? This is the swing. If you put your stop loss around here, what will be your target? Your target will be what is the swing below, what is the swing below this trade? What is the swing below this trade? This is the swing below this trade. This is the swing which attached to the trend line. This is the swing below this trade. This is your target here, around here. See, if you are entering trade around this area and placing your stop loss around this area and looking for this profit, means your expenditure is 3 to 4 rupees and you are getting 1 rupees profit. It is totally loss making business. So we have to ignore this business. This risk to reward is not matching. Again it came and broke the trend line here. This time you have to place your stop loss here and you have to look for this target. Again it is loss making business only. It's not getting any proper reward. This is also not better business for us. We are leaving this trade also. And again it came and broke the trend line once again here. If you place your, see, if you, this time you have to place your stop loss around this swing once again. It is the swing above this trade. See, if you place your stop loss and we have to look for this around this area or this area for a target, right? First you have to look for this or this area. These are the swings below this below this trade where the price is breaking this trend line. So this is also once again loss making business. Your risk is more than your reward. So you have to ignore this also. The same way, if we keep on moving, see, again price broke the trend line here also. In this area, what you can do, here also we apply the same method. If we enter the trade here, before entering the trade, we know what is our risk, we don't know what is our profit exactly. We can just anticipate what is our profit, but we don't know what is our exact profit. So what is the swing above this trade? This is the swing. If I keep your stop loss around here, and if what is the swing go below this trade, this is the swing, right? This swing which is attached to this trend line. I will calculate this also once again. See, this is the swing, this swing. See, if I am entering this trade here and I am keeping my stop loss here and my profit is this much, I am anticipating this much as my profit. Here also my expenditure is more than my profit, right? This is also 1 second loss making business here. We do not enter this trade also. I am giving you the business example, so it is very relatable. See, once again, that's why we have to wait for the better trade. We should not take the trade always whenever the trend line is breaking. That's not a better way. See, once again, what happened here? Again, price came downside and it went up and started consolidating at this trend line once again, and it broke the trend line once again here. This way, what is the, see, price is breaking the trend line here, and what is the swing above this trade? This is the swing. There is a swing rise. Here only it got turned. Here also it got turned down from here itself. See, if you enter the trade here, and again what is the swing below this, which is attached to the trend line? This is the first swing. Okay? This is our target now here. If we enter the trade here and looking for this target, see, if you enter the trade here, you are looking for this target. See, your expenditure is very low and your profit margin is very high. Now this is the better business here. That means that is the better trade here. And if I calculate what is the risk to reward here, there is a separate tools for this also. I am looking at short position, so I am take this short. This is the area where I wanted to enter, and this is my stop loss around this 50,000, 41,500 round level, and my target around this area. See, my risk to reward is what is 4.5. That means I am losing 1 rupees to earn 4 rupees. This is the better trade here. So always remember, we should not trade whenever the trend line is breaking. We have to calculate our risk first, then we have to enter the trade. We have to calculate our risk, we have to anticipate our profit. If both are matching, that means if risk to reward is better, it's at least 1:2, then we have to enter the trade. Thank you.